Ladies and gentlemen, welcome. We're going to be looking at Oracle today. My name is Alex Dworkin and I'm a managing partner at 4D Capital. We specialize in one-of-a-kind math that allows us to calculate the market and individual stocks in multidimensional space. And when we do, essentially perfect order presents itself. On top of that, we've developed a number of very powerful timing tools that allow us to predict not only what the stock market is going to do going forward, but exactly when it's going to happen. And when we combine both of those tools together, we can once again make very accurate projections in both time and price and on multiple time frames, whether it's short-term or long-term, doesn't really matter, of what any individual stock or the overall stock market is going to do going forward. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim. So our firm's goal is to essentially identify stocks that will 2x, 5x, 10x within a relatively short period of time. So we're essentially looking for the next NVIDIA, Apple, Bitcoin, Tesla, so on and so forth. Now, we can do that by using our three-dimensional calculations and our timing variables. We've developed a very powerful software over the last couple of years, and what we can do is we can scan the entire S&P 500, for example, and we can identify stocks that are coming into very important bottoms. And we can calculate from those bottoms exactly what those stocks are going to do next in both time and price. That's one of the reasons we're able to make very accurate projections. With that in mind, let's go ahead and jump into today's stock, which is Oracle. Oracle is one of our 52 mega cap stocks that we analyze twice a year, and this is simply an update that is a bit in time because we had a major spike in the stock last week. So let me just share with you our prior analysis from February 11th of 2025. At that time, we were essentially saying that Oracle, you can read it on your screen, take screenshots, but we were saying that Oracle will increase into approximately August of this year, at which time it's going to put it in top at this mid-cycle top. That still, I'll jump into the current analysis now. And after it puts in the mid-cycle top, it will decline into this mid-cycle bottom, okay? So we had original targets at that time of up to $240 a share. We've since surpassed that, and of course we had this major spike higher into this particular mid-cycle top. So the question becomes, what happened to Oracle? What is it doing now? And what's going to happen going forward? So let's take a look at our current analytical framework. Just very briefly, I'm going to explain what this is to our new visitors or people who are not familiar with our work. Basically, what you see on the bottom of the charts and the top of the charts are what we call cycle composites. This is a very simplistic representation of a very complex mathematical concept. So we've developed the ability to scan the chart back and identify cyclical composites, and we are then able to project them into the future. Now, it's important to mention that the bottom composites are essentially responsible for the bottoms, and the top composites are responsible for the tops in this particular stock or any stocks that you're analyzing. What makes matter even more complicated, and there are typically multiple composites running in any given stock or any given market at any given time. So I use Dow Jones as an example always. In Dow Jones, we have two bottom composites and two upper composites running at the same time. But if you are able to put them together and you know how to put them together, by the way, this is only long-term representation. We can narrow down the time frames, as you can see here, into 18 months, 20 weeks, 40 days. By the way, these are not fixed. They're fixed here for our purposes, control purposes, but they are always variable depending on the structure of the stock that we're analyzing. Anyway, if we put them together, we can very closely replicate this particular line on the chart, okay? The lines you see on the chart is what we call cycle clusters, okay? And this is also a very simplistic representation, just a line on the chart that for most people doesn't make any sense. But from our perspective, it's a very simplistic representation of a very complex mathematical concept. So over the years, we've developed a number of proprietary cycles, and we have the ability to scan the chart back, identify those cycles, and project them into the future. And what we found over the years is that typically important turning points, or even short-term turning points, happen not when any particular cycle arrives, but when there's a multitude of cycles arriving at the same time. So for example, if we have 2, 5, 10 powerful long-term cycles arriving for any given stock, rest assured that there's going to be a long-term turning point there. Okay, I always use 2009 March 6th example when we had 15 long-term cycles arriving at that juncture. And if you're familiar with that structure and you know that those cycles are hitting, and you know that the market has been in a bear market for the last 2.5 or 2 years, you very well can ascertain that it's going to be a major turning point, and then the market will increase from that point going forward. And that's of course exactly what happened. So what is it telling us about Oracle? So our original forecast essentially remains the same. The Oracle was topping into this mid-cycle top. So as you can see, the computerized model suggests June 8th of 2025. But as I always indicate, these are long-term composites, so this will get us into the neighborhood associated with this particular time. But typically there's a plus or minus 2 months of variance associated with it. The cycle clusters will give you the actual date of when any particular top will arrive. So for our purposes, we're still working into this mid-cycle top, and we have to assume that this speculative spike higher on Oracle was the completion point of this particular mid-cycle top. Even if we retest the highs, they're not going to be much higher, because we are pushing into this particular mid-cycle top, and once it completes, which I personally believe it already completed last week at $345, then the stock will begin to move down into this mid-cycle bottom that is scheduled for 2026. Second half of 2026. We have to adjust this model. It's not adjusted. That's pretty much the overall forecast for Oracle going forward. Let me just show you another representation or another view of it. So the green lines on the chart represent all possibilities in three-dimensional space. And as you can see, Oracle thus far has hit into this particular top. Now, our original forecast off of this particular top was that the stock is going to decline 20, maybe 30%, and then go higher into that major cycle top. I'll go back here in a second, and I'll explain that to you. But looking at the chart and considering this major spike higher, also considering this major gap higher and this major gap higher, we wouldn't be at all surprised if Oracle retraces all the way back to this particular gap, which would represent a 50% decline in the stock. This one is a sure bet, around $220 to $230 a share, but most likely by the time this bear market completes itself, not only for Oracle but for everything else, as you know, if you're familiar with our overall forecast, we'll end up at this particular gap, which represents a 50% haircut from the top of this spike higher. And that is something that investors should anticipate going forward. Now, we're not particularly interested in trading Oracle at this juncture. It would become a much more interesting opportunity once it pulls back and resolves the gaps you see in the chart, as well as completes into that bottom that I've just described. So let's go back one more time to this particular view. And I just want to show you, because there's a lot of times that I show this view, how stocks tend to increase from, let's say, major cycle bottom. This is our bread and butter, right? This is the stocks that we try to identify. These are the stocks that will increase 2x, 5x, 10x, and this is a perfect illustration of what I'm talking about. So we had a major cycle bottom here, and then from that major cycle bottom, the stock was expected to go up into this mid-cycle top. Now, our original projection was, $240 a share, but even from this location, which I believe was, I don't have the price, but let's say at approximately $50 a share, from $50 a share to $250 a share, that's 500% return on your investment, correct? And that's what we should anticipate when we see structures like that. And as you know, over the last couple of months, I've been presenting to you stock over stock over stock of this particular setup. So that's one of the reasons we're so excited about the developments we were able to accomplish within our software that is able to identify such stocks and then project them into the future. So I'm not being exact in this particular summary for YouTube, and that's of course for a reason. We have a 30-day free trial associated with our service. All you have to do is request it. There's no credit cards, no strings attached, nothing like that. Just go to our homepage, click on contact, and you can send us a very quick email and we'll set you up with that account. And we have so much information there, not only in terms of this stocks like Oracle and 52 mega cap stocks that we analyze all the time, but we also follow the overall stock market. We have fast movers, we have super equities, are just absolute treasure trove of information, and particularly for the stocks that we anticipate to increase quite significantly going forward. So the link at the bottom of the description of this video, you can click on that and follow through. Also, we have a webinar coming up this Friday. During this webinar, we show our math, we show proof of our work, we show off our software and how it works, how it's able to identify all those stocks and scan the entire S&P 500. But the biggest selling point is we also discuss the overall composition of today's stock market and what it is going to do going forward. So I believe people will be able to find it quite interesting, because we typically shy away from discussing the overall market in this forum for obvious reasons. So the presentation itself is very limited. It's only open to 10 people. I believe we still have a few spots left. So I do encourage you to go ahead and register for that. The link in the bottom description of this video. And of course, don't forget to subscribe. That's it for today. Thank you very much for your time. We'll be back with another update tomorrow. We'll be looking at the dollar index and what it is going to do going forward. Let me just say that the death of the dollar has been greatly exaggerated. So I think you're going to find it quite interesting. Until tomorrow, thank you very much. Bye-bye.